Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. One moment, please. Can I get a screen and audio check in YouTube and the Trader Lab, please? Thanks, Marty. YouTube's good, thank you. Well, thanks, everybody. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars and the community itself. The Trader Lab's a community of like-minded traders who come together to leverage their collective experience. Trader Lab is really about brand. Bring it. What have you been doing? How's it been working out for you? Do you actually have an edge? Do you know how to build the business of trading? The business of trading is really different than most of us think it is. It's gaming, which means it's statistical probabilities. It's not predictability, confirmation, or all the psychological or emotional things we really want to wrap our arms around. Security, certainty, avoidance of risk. It's natural. We're wired for it. Doesn't work in this business. And we all have winning trades, even if we're losing traders. So it's really a matter of creating sustainability. But in order to even do that, you have to understand what this is. And most traders have a fantasy, and they're sold fantasies by the vendors. I will say that we've all walked in those shoes, so that's okay. The difference is, can you learn from your experience and not keep repeating it? For me, I coined a phrase called Trader Groundhog Day, working hard, waking up in the same place. If you're waking up in the same place and working hard, you might want to say, well, I don't want to keep repeating this class. You're already paying enough tuition and assets and time and psychological wear and tear. Let's get going. We have a lot to talk about. Yesterday's trade was very interesting, as you guys know who followed the stream. It was shorts. However, today, the story has changed. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of losses and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. We get into it. We always talk. The idea of this stream is to help you understand market mechanics. If you understand how the market works, at times you're going to be able to develop structured trades or use the trades I and others in the Trader Lab have shared and build them into opportunities, but you have to vet them. And the thing about a structured trade is you already know where your trade might show up, as opposed to making it up as you go. The business of trading is plan-based. You anticipate the trades. You don't predict them. You know, if you have a plan, where they might show up. And you also know the condition of the market and if that specific trade is qualified under the specific conditions. When you come to the market, you bring your plan to the market, you already know what you will do. You do not know what the market will do. So it's the same as gaming in the casinos. The dealer knows what that dealer will do. They play the game exactly the same way in order to extract their edge. They don't know about the cards coming out of the deck or how gamblers are going to play their cards. They have no control over those elements. They only control what they do. It's the same in our business. You have control over what you do. To have control, you have to have a plan where you know what you will do. You are not making it up here. You are bringing the plan here and then responding to the participant behavior. And the participant behavior is 100% random 100% of the time, same as the casinos. So if you can accept that as a proven business model, then we have to adjust how we operate in that specific environment. I hope that makes sense. That's the Trader Lab. That's the business of trading. And the Trader Lab is the leverage of the community. It doesn't matter how long you've been trading What does matter is you don't want to gamble anymore. You don't want to play a video game. You are interested in sustainability and building a potential career in this business. It will challenge you beyond anything you've ever done because you might as well be on a different planet. You cannot relate to this based on what you know from your real world experience. The only thing, in my opinion, that you can relate to is being a shopper. You know how to go to the store and shop, and you understand when the price is on sale, you throw 4 in the cart, and when the price is too high, you refuse to buy it, or less people will buy it. The market or the product is going to rotate based on your time frame and always try to find a fair price so buyers and sellers can agree. In multiple time frames, which in our business are real-time rotations, that process is always taking place. If you can understand, and that's called the auction, if you can understand how it works, then you might be able to develop trades to operate. So if you know how to shop, you already are ahead. What you need to do is understand how to shop in multiple time frames, if that makes sense. This is Bruce's pilot program. Remember, we always talk about Edge. If you need help in developing Edge and want to get a further understanding of Edge development, you might want to check this out. There's no cost for this. I think no cost is a good concept. What do you think? Now, let's go a little further. I'm going to talk about a couple of things today. First of all, this is ongoing for the month of October. You can win 3 months of Global Plus stocks and futures data. All you got to do is take some screenshots of your trades and drop them on Instagram, LinkedIn, or X. You know, something that looks like this. And you can win a blue jacket. Use hashtag free blue jacket. The blue jacket, if I can find it here, looks like this. Pretty cool. And it's got some other stuff on the back of it here, if I can find it. But here's what, some of these look like. So, is that going to be you? I'll tell you, that could be you. There's a lot you can do. So just throw your trades together, make some notes on them. What did you do? What was the rationale? And post them. And you can also get an invite to the Trader Lab Academy, and there's a lot more. So 3 months, guys, as they say, get those in. Show your entries, exits, key levels. What are the order flow concepts? Don't miss out. Free is good. Now, I want to show you something. This is a market profile, and I'm not going to spend much time with this, but basically what auction market theory is shopping. What's too high, what's too low, yesterday's low, and what's fair. Fair is that high volume, and we can see that in a profile because this is called a volume point of control. Don't worry about the language. But here's what's important. You notice yesterday, now this is yesterday's RTH, when the shopping experience, when the price gets too high, we run out of the buyers. See how the volume dries up? This gray area is the volume. When we come down here, we're running out of sellers. And so we do this rotational thing. And that's where the high volume is. So yesterday, this was the fair price. Now, out here was where we ran out of buyers. Now, yes, today's ETH high, which has certainly been left behind, was at 76.50. Notice where this is, 76. It's an area. So in the ETH, this was the ETH high, which could be a short, and this was the ETH low, the retail price. So what it's telling us, and this is the shopping experience again, too high, and this was the fair price. Now, at this point, for me, coming in, and I'll explain why, the idea was, depending where we open, to come potentially to 65, and you'll see where this level comes from, to here, to take out the low of the day, and to come down here and here for the stops. So what did we do? We had a new all-time high in the RTH and ETH yesterday, and yesterday we sold near the high of the day. Just luck, everything's luck and probabilities. Gaming is luck, and what luck is randomness. But statistical edge puts the quote luck on your side. Does that make sense? So shorts, ETH, support, and coming in today, it was the same thing for me. So it's shorts. Okay. So now I want to show you yesterday, and then we're going to get into Bookmap. This is what it looked like yesterday. I want to show you where the levels come from. Now, this is RTH. Now, here's an interesting concept, and I always talk about this. The market goes up to go down. What is this all about? When the market gets lopsided, and this is called market mechanics, you're going to have longs, sell stops, longs, going to the moon, sell stops, longs, sell stops. Then what happens here? This was our all-time high, and what happened here is we found our sellers. So, and this is not the high of the move. What this is an exhaustive high. When you have an exhaustive high, it is not the high of the move. It is, we're out of buyers. I'm not paying that. And then what happens to the longs? We're out of here. Sell stops, sell stops, sell stops. It's a concept. And then down, and this is the selling, but we know we had our buyers here. You see the tail? And we come down, it looks like it's going to zero, and now they accumulate the inventory, the higher time frame, and now you close here. That sets up higher, inventory grab, just a little up, thanks, trend day up. Now, where are the sell stops? There, this is a big trend day, there. Again, long. So now what happens here is going to the moon. Well, but don't you see a similar scenario here? We got the market long. What might the market do? Well, if it goes up here, which is what it did yesterday, and nobody knows, and we find our sellers, and actually, if you watch yesterday's stream, we already found our sellers at the ETH high, and that was the reference point for getting short yesterday. And my teeth chattered the whole time getting short up near the high of the day. And that's just luck. I don't want you to think for a moment that I know anything. Anybody who says they know what the market's going to do is just full of baloney. As they say, they're blowing hot air up your something or other. And so it's an area. And then we don't know the outcome. That's just the real world. Here's what we know, and this is yesterday's RTH. What we know is 90 is a high volume area. It's too high. It came from here. We know that 5750 is yesterday's highest volume. And we know in this consolidation, so the low is here, the high is up here, this 6475 is the highest volume for these overlapping days. Now, coming in today, there's a high probability we take out either yesterday's high or low. So I was aiming for yesterday's low and possibly taking this out because there's stops here and maybe down to here. So this outside edge. So I'm actually trading multiple time frames, but I had to get 65 to get to 57 and to take the low. So everything's leaning that way. Now, let me show you something else. Now, I'm going to show you how this all played out, but I want to show you what actually happened. I just grabbed this maybe 10 minutes ago. Where did we go? 64.75. Where was I trying to go? Here. What did we not do? Get under here. So I had shorts in the morning, and I had a scale here. So I had, when I get short, I take multiple scales. I know this is a fair price for all the shopping in here. And I know yesterday, going down in time frame, this was the fair price. So when I was getting short, I was, get scaled, then to there, then to there, and then this was the runner, was somewhere down here, and that's just the way I'm sticking to it, and that's what happened. So now let's look how this all manifests itself. Are you guys with me? So far? How we doing? Please give a like if you're finding this useful. And if you really find it useful, the real thing to do is visit the Trader Lab. There's no cost for it. There's a link in the bottom of YouTube. Also, copy this link, forward it to your trading buddies. See what they have to say about this and if they get something out of this. So, 8:25 Central Time. Remember, ETH high. It's that this is the outside edge from yesterday. Okay, so I want you to know at this time, this is why this was a short. Just saying. Not that it would be for you. I'm just saying it could be. If you're trading the ETH, you would already know that this is where the buyers yesterday said, "I'm not paying that." Remember, we're shoppers. Now the liquidity comes in. Now this is the RTH open, and I posted in Trader Lab. I said, guys, if right here I saw a short, and I would be taking a short here, except I'm going into the RTH open, and if I'm not. And it's not a place I want to sell. Right here is a short for me. Location. Think real estate. And I can't take it because of the open. So I didn't take it there. But I already have my reference point for where my sellers took control in alignment with this location. So for me, shorts. So got to get a short. So let's look. So right here, this is RTH open. I call this this is the developing volume point of control. And I created just a way to narrate the market for myself many years ago. And it's called VPOC migration. And let's not again get hung up on the terminology. Let's look at the auction. In other words, the behavior of the participants. The auction is the shoppers, and it's all time frames. So you could be a shopper, and this is where it comes into what is your time frame. Some traders put a trade on and they go take a nap. Other traders are going to be trading these rotations. For me, since my short is here already, I now know this is where the sellers took control. I'm going to just put a little box over this thing. Try to. And I do this for myself because I forget levels, and I get myopic, and it's one of my weaknesses. A lot of stuff going on, and I'll miss things. So I use this here. Very simple. So market opens. This is too high. This is now resistance. And this is my opening swing low. So too high, too low, too high, new retail price. It's now lower. This is the language. So what I know is too high, come above. So this is called an open auction. It's like, what's going on here? And I'm looking short, and my short, again, is because of the structure from yesterday. I'm not paying that. All right. Up, down, resistance. So I have sellers here. I see liquidity starting to come in here. I took a short. Okay. Now, get risk neutral. And my stop is above, because where was my actual trigger? It was there. This is where the sellers took control. So here you have location, think real estate, ETH high, no clue. See the change in behavior. See right here you have exhaustion. Now look at this, okay? So what I have is now sellers here, two sides, too high. Now, when I say it's too high, this is not like you put your stop here. Where was the selling? It was here. You see this? So I always am looking back to see what happened in the last auction. And I'm using the ETH high because this was the location me just see if I can get this for you. The 76. See where it came from? I'm not paying that. No, I'm not paying it. I am not paying that. The 76. Is everybody tracking? This is how ICT. I have no idea about ICT. I couldn't tell you about ICT because it's not part of my. I don't know. It's. I don't want to disparage any idea except to say there's nothing new in trading. Trading has been trading since the first time they traded walnuts for apricots. It's been the same, and an auction is bartering or anything else. It's trading. There's all kinds of new. There's always been things that have been put in new wrappers and marketed to retail traders. My opinion, nothing new. So, and again, it's just an opinion. It's probably not worth anything. But this is how the market works. It's called auction market theory. So marketers, they've been around, and snake oil, you always have to be careful. Snake oil's been around since there've been snakes. So that's been happening a long time. And retail traders are so susceptible because they'll do anything to become profitable traders. And everything works randomly. What every trader, no matter what process you embrace, if you can't measure it, then it's garbage. Is that too direct? If it's random, it's garbage. So random inputs in a random environment. In early days of computers, we had garbage in, garbage out. It's garbage. Sorry. Casinos are not using random inputs in the games they play. They use something called an anchored input. And I did my webinar. I did a primer webinar. It's in the Trader Lab, as well as a library of webinars and a whole document section. And it's all available at no cost. It has about 34,000 views. And it's really about a very simple concept. Trading is not complicated, guys. It is just random. Anyway, resistance short. So now let's think about this a little bit. So we opened here, did the old wiggle and the jiggle. Open auction. I'm me short. All these are shorts in the Trader Lab if it's vetted. And again, where does this thing fall apart? Out here. So if that doesn't fit your risk parameters, you got nothing to do. So now on the shorts, let me just show you that's 65. So what I did, now what I do, it doesn't matter really what I do. This was a key location here. This is that 65 I was talking about. So for me, my scale is just ahead of it. And then I'm looking for this. That, remember, see where the ETH low was? That was the retail price from yesterday. For this thing to go lower. And statistically, here's what I want you to, just a couple statistics. Taking out the previous high or low has an 82% probability. That's why I was looking to take out yesterday's low and getting to the point of control, this, a 68% probability. So everything for me is south by southwest, And the ETH high or low has a 97% probability, and taking out the first hour's high or low, 98. So everything for me was statistically, and the way the draft was blowing was south. So anyway, this is a sweep. Now let me show you a couple of the little pieces here. So anyway, for me, short, scaled out, and runners. All right, and actually, don't worry about what I do. Not saying anybody should do what I do, but I'm always talking the stream about 2 lots because for developing traders, it's about the idea is to begin to build a plan and extract statistics. It's not about trying to move an ATM in the basement. It's about surviving your own development and your emotions. Right here, I see the sweep. Now, the sweep sets up a couple things. It says potentially counter rotation. Now, for me, I'm still sitting here and I have another contract. So this says counter rotation. So I get VWAP in mid. Right here, there's the possibility to come back here and go down. So I'm still sitting in here. There's my scale. See it? So now I get my next scale. And now we get VPOC migration. This is the same concept I was showing you at the RTH Open, but it's larger. So now this is resistance. Let's think of the language of the market. I don't use indicators, and of course you could do whatever you want to do. I'm only sharing what I do. What I use is behavior of the participants. This is the language. The language says this is the retail price, high volume. And if it becomes too high and now the fair price is here, this can be resistant. I'm not paying that. Retail. As soon as I cross over this, now once this happened here, I'm managing my trades. When I came over here, I covered my short, and here, and this is just my plan. I'm not saying it's a good one. You could just be sitting short with your stop over the high too. This is my area now for a price check. You guys ever go to supermarket and you hear price check in aisle 3? So price check in aisle 3. Is this too high? If we come back to an area that was too high, this is like resistance. It's another way to look at it. So for me, I took a short here. And because at this point, if I held this, then this is my support. So I sold this, putting my position back on, same trade. So all I did was cover, put it back out. Then I'm looking to come back here. Is this too high or is this too low? And it's like, I don't know. Let's see. And where's my resistance again? It's right up here. I don't remember. Oh, yeah, it's here. So this, I get the sweep here. Now I remember what I did here. I was looking to short this. I saw the sweep. And when I saw the sweep, I said, oh, I got to wait. And then we came back up here. When we came here and we broke here and we tested, this is where it was. And then I was looking to come down here. So I'm looking here, and my scale has to be ahead of this, not at it. And that one did not work for me. Okay. So it didn't work. So now I know I have too low. I got this. Oh, you know what? Let me look. Hold on a second. I gotta go back and look at my thing here. This is not making sense to me. What happened here? Hold on, guys. I gotta go back and look at my book map because to actually do that because I can't remember this stuff. Oh, okay. Yeah. All right. Here's what I did. I sold this, and my scale was ahead of VWAP in mid. That's what it was. And then I got taken out. So the trade scratched. And here's why. This is my target, and then in here. So this is my support. But what I know is when we came up here, and this is, see where this is drawn? This is from the ETH high, right? This is that line right there is my micro high volume. This is my resistance, and this is the head of a pin. And so I'm looking at this, and when I came back here, I sold it, and I scaled here because I might get my buyers at the mid and the VWAP, and then come across, and then the trend has changed. So this was, I guess, when I'm looking at it now, I'm going, well, that was a pretty aggressive short, you know. I didn't sell it here. When I saw this, I think I got short like right in here, you know, as soon as this, but to there, and then the trade just went south of the border. Then we took off. Once it took off, I didn't have a trade. Okay. I'm sitting here now and I'm going, wow, that's nice. But I did get my trades. Now, my next trades and are only longs, and I have to wait. I have nothing to do. Now I'm sitting here going, what's going on? Please give a like, by the way, if you're visiting in YouTube. Now I got to find my next trades here, guys. Hold on a second. And some of these are posted in TraderLab. And I don't call trades. I mean, you don't need to take my stops. I take them. It's nothing unique about it. Okay, that was the 65. I got to get all the way turned around here. Okay. At 9:00, yeah, right here. Okay, let me start talking about longs. So the market runs away and it's like, oh, wonderful. Now, let me tell you how I feel. Well, first of all, I'm doing this 46 years, so I'm not as acutely stimulated by this, but I still feel it. I just recognize it. Psychologically or emotionally, you know, the market runs away. The first thing you feel is FOMO. Oh, I didn't get long. I shoulda, I woulda, I coulda. Why didn't I? Well, I don't have a trade. I can't get long, but I feel it. You? I do. So, but I recognize my feelings. And I know those feelings have cost me, I'm not going to put a number on it, but I will say a nice five-figure number, okay, over many years. So that and other things, you know, that are related to all that. FOMO, revenge trading, all the ridiculous things we do to hurt ourselves because of our primal wiring. I've done it. You do it. We still do it. We still are human. But we have to learn to recognize behavior and the response. So over time, what's going to happen is you're going to recognize it, and you have to interrupt that impulse. It's an impulse. It's not a conscious thing. It's unconscious. So you can say consciously, I'm going to wait for my trade. And then all of a sudden you get myopic and you push the button like out of nowhere. Well, that's because there's something else at work in your brain. And that's hide, as I call it. So anyway, 9 o'clock, this thing runs away, and I don't have a way in yet. So I got to look back and see where it was, because something really was interesting that happened at 9 a.m. Let me see if I can see it. This. So I'm looking, and this is another outside edge. So I had my single. Remember my resistance. Once I take that out, then I can come through here. This is a low volume zone from yesterday, so it was poorly auctioned. Let me go back and show you. So what I'm doing now, so once I get through the 76, you see all this? This is just, these are called singles, which means, think of them like 30-minute gaps. It just says there was urgency in the selling. And this was our outside edge, remember, for the shorts. Now we're through this. This puts everything in here on the hit parade and yesterday's high, because statistically it's either yesterday's high or low. And all this was, how does the market work, you ask again? Market goes up to go down. Market goes down somewhere, who knows? And once we get shorts, what do we have now? We have buyers. If why do we have buyers if there's shorts in the market? Buy stops. So once we come up here, anybody who's sitting short and their stops are going to be over yesterday's high, we have that high probability of taking it out, about 82%. Since we're not going south of the border, we turn the barge around and now we got to get long. So this is poorly auctioned. It just is potentially can rip through here. So now the patience is required. The patience. And 90 is a high volume area coming back the other way. So let's come back. So now, where's this 90? It's here. So now, how do you get long in this? I don't, and I sit here and I have emotional feelings. But we have a trade in the Trader Lab that I've shared, and it's the primary trade I think every trader has to learn initially so they understand and can start building a foundation of edge. And that's called mean reversion. Mean reversion is outside in trading. That's what it is. Let me make sure I got this thing. Did I do this? No. Hold on. Losing my mind. See, if I multitask, I forget to do stuff, which is not good. That's why I don't initiate trades when I stream. Not good. One second, guys. Got a little trouble here. Okay, sorry. I'll have to do. Wow, come on, man. I'm getting a little frustrated with this drawing, you know? Doesn't have to be this hard, does it? Okay. So, this is important because this was resting liquidity. I broke through it. I have a sweep here. Now, this is another important piece. When we get buy sweeps, often, using the term very carefully, often, not always, often, at an outside edge of a rotation, this can give us a counter rotation. It doesn't do it. What happened here? Sweep. Where's my counter rotation? Doesn't do it. Break the liquidity. Sweep. Where's my counter rotation? Doesn't do it. If this, then that. If not, then what? Then that. All right. What are you going to do? I don't know. How do I get long? Oh no, it's getting away from me. What am I going to do? I don't know. Watch. So, what do I know? 922. So here's what I have. Now I'm going to show you something a little more, it seems advanced, but it's not when you think shopping. Let's go to the store together, the financial supermarket. Let's go. Let's shop. So how does this shopping thing work? So let's look at this. Chop, 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 right? Going to the moon. I don't know. 90 resistance. No precision. Remember, there's stops here. Creates momentum. So that's why there's no precision in trading. I call it horseshoes and hand grenades. This is a high volume area. What happened down at that 65? A high volume area. The market comes to high volume and it can act as resistance. Doesn't have to act like anything, but it can, right? So up here and clueless. Now, where was my buyers? Well, there's buyers there. There's absorption. Buyers are there. And we had a single, I should say, at 82, right? So this was an outside edge. I get above it. So I have a couple of pieces. Now, mean reversion is outside in trading. And the mean part of the mean reversion trade is where's the outside? You know, is it here? Is it there? Or is it going to be out here? Good question. I don't know the good answer. I know that I have to be very careful, but my requirements are. Now let's get down into what you might call a different time frame. This volume that's sitting right there, this is a store. I'm not paying that absorption. Yeah, but it's on sale. So resistance, support, it's here. And why didn't the market go down? There's absorption. See the iceberg? So I know I've got, see the buyers? Why isn't going up? I got my sellers. There's my icebergs. Let me move this down a little bit. So now I go into a consolidation. It's my first chance to get long. for what I call continuation trades. And why? Yesterday's high has what? Buy stops. What are the shorts doing? Covering. If you were sitting short, think about this. You're either getting stopped out or you're using counter rotations to cover. That means potentially we got buyers looking to get long and we have shorts looking to cover. So that puts buyers in here. Okay. So now I have to refer back. Where are my buyers? Well, there. But what else do I have? Sell stop, sell stop, sell stop. Same concept. So this here, they were asking me about this in Trader Lab. This is a long I took, and my teeth are chattering. I'm just as, concerned about a stop as you are. The difference is I already accept when I put a trade on, I'm probably going to take a stop. And you're going to say, why would you put the trade on? Because I know it's 50-50. Doesn't matter what my edge is. That individual trade is like flipping a coin. Over time, I have a probability of the trade working and an edge. But on this one, don't know. But what do I know? This and this. And the buyers are here. This failed. So I have the sweep. I have absorption. I have a break high. This is a micro trigger. And the micro high volume is sitting in here, right there. See that little node? So I have too high, too low, break high. So these sellers were absorbed. See the red delta there? And the sweep. So I'm looking for the counter rotation. I don't get it. I got my buyers here. Why? Market didn't go down. Buyers are still in control. They take over the sellers that were selling right there. Break high. It's like a little mini breakout. And where's my retail price in this little store? Shopping. Remember, this is shopping. So, break high. Now, if this is in your trade plan, that could be a long. It's not for me. I want the rotation. That's just the way I work. Just saying. This is a potential long. And where's my retail price from here? Retail price here. Retail price there. That if I get long here, if that's my trade, this acts like my volume point of control or my retail price. Oh, it's on sale. I'm not paying that. Okay. Scale. Watch. Now, what happens here? Watch. Where's my next resistance? Single. 92 quarter. Can you see I'm going to say the method to the madness, but basically structure. There. So I'm coming up the financial food chain, and these are resistance. 92. Where's the reaction? 92. See it? Now, that's not all it means is when I take a long, I'm going to go here because that's my retail price in this store where the sellers took over, and this price is too high. So support, resistance. This could be a target or nothing. All right. Now we get VPOC migration. Let me tell you the difference. This is this store. And these are consolidations, but I think of them like shopping. So if you think shopping, that's why you don't have to make this some complex, mysterious thing. If you keep it to something you already know, like shopping, then you can interpret what it says, its language. If that's too low, then this might be too high because that's where our sellers took over. Well, the trend is up. So if I clear this, which is scale, my next resistance is that location. And then we clear this, we keep going. And we have a high probability yesterday's high. Now let's look at this. Now, the point is, this is a retail price in there and there. For the whole day, this yellow line represents the volume for the full day. So let's think multiple time frames. For the whole day, this is the retail price. for the fractals or shorter time frame, subject to, this is the retail price, too high, too low. So I know where too low is, and I know down here is too low. So let's watch. So resistance, no clue. Now, VPOC migration. That says new retail price for the day, and then where's my support? Now, if I didn't take this, I have to still be looking for a what? Reversion trade to get long. Now, here's the challenge. Where do I get long? Let me explain. We have two locations. We have this out here, an outside edge, which operates just like those, except now this is the current auction. This is left over from yesterday. We can get rid of it. Okay? So now it's out here with support aligned, or out here to come back there. Same as out here to come back there. If I come outside, I'm going to look for coming back there and then to take out the top. Now, one more little piece. How do I know? And again, I don't know anything. If anybody, now, by the way, the words I'd like to use is clueless, because it's random, but not ignorant. I am clueless. That means I'm not predicting. I'm anticipating. There's a big difference. I can't tell you what the market's going to do. I can tell you where it might do it, and I can also tell you why it might do it, but I can't tell you if it will do it. Period. So all of us who are trying to get certainty and confirmation, wrong business. The best you have is maybe. Maybe it'll do this. Maybe it'll do that. Maybe it'll keep going. Maybe it'll counter rotate. Maybe this will stop it. Maybe it won't. And this is called the IBF. There's a structured trade in the Trader Lab called, there's two of them right here. One is, and at 9:30, which is there, we get something called the IB, or initial balance. It is right there, the IB, first hour's high or low. And you remember from the statistics, there's a 98% probability we take out either the first hour's high or low. And based on the way the lay of the land is, I would suspect it's going to be this. Now, we have two trades. One is called the IB continuation trade, which would be a long up going for yesterday's high, or the IBF, which is made up a name for it. I didn't know what to call it. The IB failure, which is a reversion trade to come back across. It can be either. For me, and I'll just tell you, since I had this here and its resistance, I was not taking the long. I was willing, of course, and I have to be, that this is the long of the century and it runs away without me and I don't have it. I already accept that because that's trading. So now I get my IBF, I don't get outside again, and that sets up the counter rotation. The IBF is a reversion trade. The problem with the IBF is this is the mean. So it's only there to there. So I don't have any trade. I can't take the short because I can only get long. So but when I see this, if I was long and I didn't understand that this is resistance, it would be an exit for me. Or if it's part of my plan, or nothing. So now I'm looking for longs to add, or if you're not in, whatever. So what do I know? Buyers are here, right? Absorption. Support is down here. This would be the wonderful spot to get it. This is the retail price. And now I'm looking again for longs. Watch. So, and I got to look back. Hold on, I have to look at this because I have to see where I got in. You know, I look at these sometimes. I look at these in hindsight and I go, how'd you do that? So I have to go back and look. Okay, I see what it is. break low, support, right? This was the long, break high, test this. Now, up, do your thing. Now, how do you get long in here? Here or here. So I'm looking at this and I'm looking out here. And I will tell you, this was my preference. I like something called range back to there. But it's not up to me. I have two locations. So I got this, I got support here, I got this, I got this, because my buyers absorbed here. Buyers, so look, buyers, retail, buyers, break high, buyers, that, break high, IBF, reversion. The only way I get long. Location, watch. Sweep, support, liquidity comes in the book. This is my long, right against this, and this is backing it up. There's my outside edge. Who knew? Here, so this is what set it up for me. I get the sweep. I know I have buyers here, and I also know I have stops under here, retail trader behavior. My stop went under here. I got long. This has to be my scale, actually, was here, ahead of this, and then hold. Sweep. This is an ad for me. Let me show you. There's my location. Sweep, add, back here, scale. Doesn't matter that I add anything. Totally immaterial. And then up, yesterday's high, wherever. Here, 68 resting liquidity, scale, and then one for the, wherever. That's it. That's all I got for you guys, because that's all I did today. That's my trades, good, bad, ugly, and everything else. But that's trading. Now, it's just a way to do it. I'm not saying it's the right way. I have found for me, and everything has to fit you. It's not what I do. What I want to do, and what I created Trader Lab, is to help traders understand that we are in an environment of volatility and random rotations. If you can pull the lens out, you can then participate in potentially larger rotations, because that's where the risk reward is. That's how you get paid for your stops. Years ago, I was a high volume trader. I don't do it anymore. 100 trades a day kind of thing. I don't do it anymore because I don't have the capacity for it, and I don't have the energy. And my broker was my partner. You have to understand, if 20% of your good days are commissions, and then if you have a losing day, you still got that 20% added on, you're really working very hard. And sure, there'd be days with big numbers, but in the end, it's what is in the end. So over time, at least for me, what I did was I started changing the rotation I traded, because my risk is pretty constant. My risk is around 3 points, 2.5, maybe to 4 points. And it just depends on the volatility and if I can read the trigger and where I get in, and it has to fit. But when I put those longs on down below, there's my probability. So, that's it. So for me, I had a scale here, right here, and now I got one left in here, and it's just, hanging out. And now this is my outside edge, low volume node. If it rotates out here, I can still be trading this. It's not a recommendation, but I'm still going to be doing why? All-time high. Now, are we going to take this out? Let me ask you a question. Do you think, and we might never take it out, this is the ETH all-time high. This is where I was shorting against yesterday, if you guys remember. So, what are we going to do? I can tell you I don't have any idea. I do know that the shorts are not having a good time. And if I get now let's think about conceptually how this might work. The market goes up in all time frames to go down, and the market goes down to go up. What is now in the market? Longs. If we counter rotate, what are we going down on? Stops, right? What were we going up on? Buy stops. Buy stops. So now we go down. What are we going down on? Same concept, different time frame. Sell stops, sell stops. So if I want to trade longs, which may or may not be appropriate, not a recommendation, what am I going to do? Use the sellers, which are us, retail traders, and I'm going to be looking out in this area. And this is not a trade recommendation. It can just keep going down and never look back, right? By the way, at 1 p.m. Central Time, the FOMC minutes are going to be released. Now, that's not like the announcement or the where they have the news thing where Powell answers questions, but it's just going to be the minutes, and you might get a ripple. And I think we have an auction at noon. I don't remember if we have that bond auction or not. So we have a couple of little things. Okay. By the way, if you guys are interested in Trader Lab, feel free to visit the Trader Lab. There's a link in the bottom of YouTube. You don't have to be a Bookmap subscriber. You will not be abused. Market, we abuse ourselves, so you don't need any abuse. Let's look. Buyers were here. That was resistance, remember, coming up 90-ish. We have the IB. We pull back here. This could be interesting. We have the express train over here. Let's draw a little box around this thing just to keep track of it. I suggest you guys do this. I do it because things roll off the screen. And I can, just completely forget that there's a level or stop sitting under a level, and then I step in front of something where I have fuel under me, and that's not a thing I want to do. What's going on? There you go. So this is, again, too low, too high, sellers, buyers, break high, too low, support. Now what? Chop, chop, chop. Sellers, buyers, retail, high volume, break high, support. See it? So I can start looking at the auction in different time frames. Where's the volume? See where it is? It's right there. Too high, too low, too high, too low, break, resistance. Right there. See it? Now, too high, too low, too high, too low, break, support. See it? So what I'm doing is I don't use indicators. So what I do is I actually read this. I go, what is that? Okay, that's too high. There's my seller. There's resistance. But if the trend is up, I'm only really concerned about this, because I can be using any of these if they're aligned with my plan to get long. Any of these. Now, this is not mechanical, guys. So if you see a little chop chop and a break, this is not any reason to take a trade. It's got to be at a location. Remember the term in real estate: location, location, location. Where's my location? My location might be out in this area, and it doesn't have to ever come back here. What I know is there's stops here, here. This is material. This is material. And we never have to do anything. Let's see, where are we? Oh, there we are. So let's watch. None of these are trade recommendations, okay, guys? High volume is here. Any longs I take, I'm going to be looking there for a scale. Tell you that. Not a recommendation. Why? In the store, over here, this consolidation, this is too high. I'm not paying that. Off we go. Now, where's too low, you ask? That's a great question. I don't know. So now I'm going to be looking. Where's my stops? Under the swings, under the swings, under the swings. Where was my aggressors? Here. The stops are out here. Now it's basically watch. Now, if I don't come outside far enough, I don't have a trade. I just sit here and go next. It's just the way it is. I'm not here to be clicking the mouse. I'm not here to gamble. I am here to take intelligent risk, not to gamble. And I still take stops. Just the way it is. Casinos have overhead and costs of production. What makes you think you're not going to have overhead? Just get real. This is business. Anthony, use the link in the bottom of YouTube. If you're interested in Trader Lab, there's no cost. You just need to verify your Discord username so you're not a spamulator, and then you're welcome to Trader Lab. And there's a lot of other additional education. Stocks, options, crypto if you lean that way, order flow with a high tier order flow tool like Bookmap, options, I don't know if it's algorithmic behavior, market maker behavior, a lot more depth. What I do, I try to keep very simple, and here in the stream I keep it simple. Some guys, there's two ways to think of trading. When we all come into business, we think it's very complicated. So we think because it's complicated, we have to find what everybody else has not found. It's like looking for the Holy Grail, the secret sauce. What happens if there is no Holy Grail and there is no secret sauce? What happens if it's not the mix of time frame and indicators that finds something that's actually sustainable? Suppose that's basically dead ends with random winning trades, but no edge. Gamblers win. Don't forget that. You can have a winning streak. Everybody does. But if you have no edge, you're still going in the wrong direction. If that's you, it's not your effort, assuming you're actually doing the work. What you're doing is you're trying to bend a defective process to align with this business. This business is not what you think it is, most likely, because you've never been in a business like this. Nobody has. These are all little distributions. These are all little areas of auction. Doesn't mean anything. But I do know is this is where I'd be going for scaling if I have a long, and I don't call trades. But what I also need to be aware of is this is not an outside edge. I can only be looking outside for me. And I'm only saying that because in the Trader Lab, I share structured trades. You don't need a lot of trades. You just need a couple. And the idea of a structured trade is it will show up. And this behavior is called reversion trading. This is the mean. In this area, this is high volume. This is also high volume. I have to get outside so I can trade a rotation to come back. So I don't have a trade. I do have structure, but I don't have a trade. So if this thing just comes out here and goes and keeps going, I don't have a trade. I just sit here and go, well, all right. But I only have a runner on at this point, so I don't have anything to do. I just sit here, work on my crochet. You guys have questions. Hope you're getting something out of this. Ben, how do you deal with hesitation? You mean the fear? Ben is asking, once you develop an edge, how do you deal with the hesitation? The edge is statistically based. That's tangible. The fear is intangible. It is based on chemicals released in your brain. Fight and flight thing. Is there an apex predator behind the rock? And when we have to make a decision, we got to do it right here. We'd be putting a trade on here if this was a trade. Okay. And if we did, we're going to be uncertain because we're making a decision with no information. The only information we have, when you say an edge, is a statistical probability. That's tangible. This is random. So I basically touch a tangible statistic to manage my fear and my emotional triggers. If you have no edge, Ben, this isn't just for you. This is all of us. Guys, if you don't know specifically where your trade shows up, what the requirements are for it to qualify, range, location, and all of that, then you have no edge. All you have is emotion. So if you only have emotion, which is fight and flight and the rest of it, you're going to just blow yourself up because you can't come into this business with and trade emotions. That's gambling and that's a video game. And I consider that entertainment. You're better off going to casinos, and this is all of us. Get the cocktails and the ticket to the buffet. It's entertainment. If you want to be in this business, you're going to find that the statistics are the weapon to manage the lunatic under the hood who wants to protect you. Your psychology or primal wiring cannot differentiate between the uncertainty of this and the uncertainty is there a saber-toothed tiger here. So it's going to try to protect you. That's why Ben and the rest of us were fearful. It's just primal wiring. So we have to solve for the wiring, and the only way to get a solution to it, and even then you're still going to be challenged, but you have a much better ability to manage it when you have confidence in your plan and the statistics are proof. It's like proof of concept. Can I make dollars with my overhead? Not my, quote, personal failures. This is not about ego gratification or boosting my self-esteem. I can't get it here. What I can get is that I follow my plan that has an edge, no matter the outcome, no matter the stops, no matter the losing days, no matter the uncertainty. Because if I actually have an edge and I bring that to the market over time, I'm a profitable trader. Today, no clue. It's the way it is. Tomorrow, no clue. Right now, long with one runner. No clue. Doesn't matter. And then, for me, I'm using similar processes as this for trade management because the auction is always the auction. That's why, what do we know? Buyers are here. Buyers are there. This was a retail price, and there was absorption there. And now I know I have my sellers here. And this is too high. And even that is too high, right up there. So if I know there's sellers are here, I know resistance is there. If my buyers are here, I know resistance is there. So I can actually bracket this and look at it. I'm not going to trade it because it's not in my plan. It might be part of a trade management process that one would have to vet, but it's only a way to keep your finger on the pulse of the market. I have my trades. If I was going to take a trade, and it's not a recommendation, is I'm looking where these buyers were. Now, who are the buyers? Well, buy stops, and there's the icebergs. And notice the icebergs are selling, but the market doing pretty good. So I know now, what do I know? There's stops here, and there's stops here. So if it comes outside, I'm now going to be looking, and this is not a recommendation, I have to look. Where's my outside edge? Now, here's another thing about low volume areas. What is a low volume area? Great question, right? What creates this? This is when the market ripped. It is an unauctioned area. In other words, this is what an auction looks like. Too high, too low, what do you think? We're out of here. But when we leave it rapidly, it's not auction. Now, this is auction. See it? Too low, too high, too low, north. In here, no auction. So that means the market has a potential to come back here to take care of this, to go, what do we think in here? And what's under here? Sell stops. So if I come outside, I can look in this area, and I know my buyers were here. Come down. If it comes out here, then it sets up mean reversion longs. That's kind of a long-winded explanation, but that's kind of the way it works. And it doesn't have to ever come back. It can just keep going, So that's it. That, for me, is the next opportunity. And until something sets up like that, I got nothing to do. How you guys doing? Yeah, lovely. Hi. Thanks for visiting Trader Lab. Yeah, I'm Monday through Friday. I stream 11:30 to 1 Eastern Standard Time. Okay, let's watch. Now, this high liquidity. I'm just going to mark it, and it's at 6,800. Remember, I had a scale right in front of this thing. Lucky me, you know. It's not really luck. You know what it is? I just take what the market offers. Um, when you start thinking about selling the high, buying the low, and all this jazz, that's amateur night. You know, nobody knows the high or the low. Hindsight, everything is very clear, right? So let's watch. Support, area, stops, outside edge, sweep. I'm not going to call trades, but we're going to tour together. How's that? Remember, low volume area, not auction, right? Just try to keep in mind the possibilities, not predictable possibilities. Stops are here, low volume is there, support is there, there. This is interesting to observe. I'm not going any further than that. We're just hanging out and visiting together, having a friendly discourse. You do need to be aware of this area, because that's your outside edge. We need to be aware of this area, and we need to be aware of this up here. So let's watch. You guys have questions in the meantime? And by the way, please give a like if you're visiting in YouTube. Subscribe, give a like, grab the link, forward it over to your trading buddies if you think this is something that might be helpful. There's no holy grail. If you're throwing spaghetti against the wall, you might as well literally throw it against the wall and see what sticks. That's not the solution. It's actually the problem, in my opinion. We've all done it. And we've all thought that we're going to find that needle in the haystack that everybody else who's walked in our shoes before us has missed. I'm going to suggest don't waste your time. Because the only thing you have is time and dollars. And if you're throwing dollars away, you're either going to run out of dollars or run out of time. Don't waste your time. Don't throw your dollars away. It's not that we all haven't done what you're doing. That's what we all do. But it's the thing about it is, if you're working hard and you're still getting the same outcome, then it's not your work ethic. It's your process and your belief that all you have to do is do more of the same and somehow you'll get a different result. Trader Groundhog Day. I think part of I know for me, when I started in 1980, there was no information. I mean, nothing. All my buddies were floor traders. They didn't have all floor traders. And I was going to go on the floor myself. And I took a course at the CME. It was classical bar charting. And classical bar charting is all about measured moves. So I came in here totally upside down as far as what the business was. Because I thought, measured moves, you're predicting. It's going to do this, it's going to. And that mental state sent me on a path of looking for certainty. So I worked really hard for many years, building certainty and then systems to create more statistical certainty. And it still ended up with the same outcome. I did it on steroids. And when I first started, there were no PCs, so everything was done manually. Draw a trend line. That was pretty exciting. Oh, gee, it went outside the trend line. Let me move that. Sound familiar? Anyway, and then I shared an office with George Lane, who created stochastics, the oscillator. That's a support area. It's not a recommendation. This is still, trying to pick this. It could be anywhere. I just sort of, hang out. So this is support. And where's it coming from? It's coming from here because we had our buyers. And don't forget, stops are under here. All of these can be potential longs, and you have to be always willing to take a stop, right? Not enthusiastic, but willing, because that's the cost. So the further outside you come, the better it is, because you have more range and more potential to get risk neutral. So let's just watch. You still had your sweep, and don't forget where the stops are. They're out here. So let's just watch it together. I'm probably going to run out of time. I don't know. But if you have questions, post them. Forward this link to anybody, your buddies who you think might have an interest in this. Trader Lab's open to everybody. There's no cost for it. Considering what you guys have probably spent, not only in dollars and losses, but who knows, chat rooms, gurus, the latest holy grail, The only one thing you need, we've all done it in one way or the other. You might want to visit Trader Lab. Trader Lab's not about me. I'm just a trader. I do this full time. Trading, it's what I do. I've been doing it a long time, both professionally and then out here now as a retail trader. And there's not one way to trade. So the Trader Lab is really for everybody. It's bring what you do, and that's fine. And also, it doesn't matter how long you've been trading. We have traders in there. Senior traders been trading over 50 years. I've got 46. So he's the old dog that I know. And then it doesn't matter. It just doesn't matter. We have all different kinds of traders in there also. Very short-term traders, and then more swing type traders, who will build a position. For me, I trade larger rotations, and it's only because I understand the market in the sense of what the potential is, not what it'll do in any specific rotation. So I try to position at outside edges or extremes. So for me, when I'm looking out here, and it doesn't mean, by the way, the market won't just, keep going, come back here. It could come here. So, but this is the outside edge of this whole, where things separated, you see? So I know out in here is the area to observe. So let's see it. Now, when I say I know it's the area to observe, I'm not saying it's the area to get long. I'm saying it's the area to observe. There's a big difference. And remember, outside edge, and now our liquidity is coming back in. So we're going to want to watch the behavior here in the limit order book. This is what the heat map is. We want to observe the locations, which are here, 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 here. So these are areas. I know, and we're all sitting here. I know for me, when I'm thinking of putting a trade on, my teeth chatter because I'm trying to pick a location. Now, for me, I don't just step in front because there's a line sitting here. I need something called a trigger. So maybe we'll see one. But I do not call trade. So if we get a trigger, we will see it after the fact. The last thing I want is anybody taking my stop. I take them. Why do you need mine? You can take your own. I mean that. Remember where the stops are. This is what's important. Fuel. Market goes up to go down in all time frames. The market goes down to go up. The market goes up to go down. Where's the stops? Right? Where are the buyers? See it? So now let's just watch. See what happens. Clueless. Sweep. Sellers. Still moving lower. Not seeing the absorption yet. Still seeing the sellers and some good selling. I'm seeing some good selling. So we want to see here was a sweep. There's the sell stops coming out. This is our low volume area that we want to be observing. 94 quarter is the low volume node. And the market often picks these things. And then we know where our other areas are. So we're watching in here to see if we can find behavior, right? This is part of trade plan. This is, guys, kind of how you go, well, this is how the market works. It might do such and such. It might come here. This is why you don't see me taking any longs. And it doesn't mean that if I take a long somewhere here, that I won't take a stop. It has nothing to do with it. That is random. But what isn't random is my plan. So now we want to watch and just see if we can observe absorption. Not yet. We had some pretty good selling, so we got to watch. Nothing to do yet. Still a tourist. Hanging out. Working on my crochet. Thinking about lunch. Area. And let's look back over here. That's why I draw these boxes. There's where the sellers were. There's where the buyers took control. It's right there. Keep an eye. Not a recommendation. What can I tell you? This is Trader Lab, and I'm clueless. Right? I could prove it. So let's see what it does. Might be interesting. What do you think? So resistance. Clear. Then here. Not a recommendation, guys. We're just touring. Right? And by the way, this is not where a stop would go. If somebody was looking at this, you have to be further away. What can happen often, from my experience, and it's just something you need to vet, is if somebody took a long, for example, the market can come down here, take the stops here, and these buyers can come back in again. And then you get your move, if indeed that's the case. And I can't tell you it is. So let's watch. And again, not recommendations that anybody do anything. This is the resistance, you see. You got to get over this thing to come back to this one. And ultimately, what you're trying to do here is come back. Now, if we fall under here, then we can come back here. And this, the IB. So we have another trade. So if this one, if this outside edge reversion trade fails, then we have another location out here for a continuation long. So we got this, it's called the IBC. And then we have the reversion trade, which is this thing working over here if it, actually does its thing. And remember, all trades are just maybe. Still looks like it might head a little lower. This is important here. Very important what happens right in here. So let's just watch it. Ben, what's so hard about trading is uncertainty. And it is always uncertain. So this is potentially the pick, right? There's the stops. They were under there. Is that a place to put your stop? No. Why? Everybody puts their stop there. Now, what will happen is, if your stop's further away and you get stopped out, the lunatic in your head's going to say, you should have put your stop there. Well, I have to tell you, for me, too many times, that's where my stop was, never again, and this is what would happen. Now, if the trade is going to work, this might be the test, you see? Remember what happened here. We had a sweep. We have location. This is, remember, real estate. Location, location, location. I call this a stop pick. And I find that if I get a stop pick, it potentially makes this even better. Because this is inventory that might have been, and I say might because I don't know, might have been grabbed. And if that's the case, now the shorts in here from that resistance can become the buyers. You see? Guys, you get something from this? Ben is asking me, how long did it take me to master mean reversion? I don't know. I can't tell you, Ben. I don't remember. I guess a long time. You know, I didn't understand really the market. I had defined the market by indicators and time frames. I thought that was what I was supposed to do. You know, because we actually use indicators as a plug and play substitute for actually understanding how to trade, I think. And again, it's an opinion, but it's the result I got. So, and I did that for years. You got to understand. Even when I learned market profile, and I learned it from Peter Stottlemyre, he created it at CBOT, and I think it was in the maybe 86, 87. He actually did a seminar, and it was expensive back then, and it was a couple days, and I went, and I sat there, and I said, wow, this really makes sense. I was doing parts of it, but I didn't really understand, because when you're putting all your focus on oscillators and Fibonacci, Elliott, I mean, gee whiz, Keltner channels, I mean, pick one, It all works randomly. It's all wonderful. So I got market profile and I studied it and it made sense to me. And I said, well, wow, I'm going to put this market profile and my indicators together. Let me tell you, I would have done better stepping on a rake like 40 times. So I wasted more time. And it was very hard for me to let go of the things that I perceived that worked because everything works randomly. It's just like, a Fibonacci extension. Well, sometimes, look, the market went right there. Well, so what? What does that have to do with anything, right? What has to do with something is this. That's what this is. This is the market, not some piece of spaghetti that's a derivative of price. And all oscillators are moving averages. Anyway, how long did it take me? It took me as long as it took for me to understand I had a defective process that I was trying to bend to my beliefs, which were absolutely not aligned with the business I was trying to be in. That's what it took me. It took me a long time to understand that it wasn't about being right or squeezing the risk out, which is a psychological need. I had to understand that I had to change that to intelligent risk and to stop gambling and trying to fix a defective process. And when I say defective process, let me ask you this, and anyone who's watching today, why was this along? Weren't we stalking along right here? Would that help you? Is this the kind of trading you would like to learn? Do you think this would help you potentially create sustainability? Please give a like on the way out. Use the link in the bottom of YouTube if you want to visit the Trader Lab. Appreciate you guys taking your time and your interest. This is the Trader Lab. You can learn this. If you know how to shop, you might already know how to trade. It's just fitting it into process and extracting a statistical edge. So you're not sitting with the gamblers, but you're sitting on the house side of the table. Hope you got something from this. Please hit the like on the way out, subscribe to the channel, and pass this along to your trading buddies if you think this is something that might be an eye-opening experience. The Trader Lab's a group of traders. It's not about me. It's really all about you. Thanks again, guys. Thanks for visiting Trader Lab, and I look forward to seeing you tomorrow.